Welcome to this week's Market Minute with me, Andrew Wilkinson, and my guest, Kevin Davids from the NASDAQ. Kevin, welcome back to the program.
Thanks for having me back.
So let's get straight into it. Markets started to sink at the end of last week with certain technical factors that we're going to get into later coming into play. However, that Truth Social post from President Donald Trump at the start of trading on Monday sent futures markets surging. Equity prices went sharply higher, Kevin. What feedback did you hear from traders?
Yesterday, there's so many different ways you could look at it. Really, my primary feedback, and I have spoken with a handful of people that are active in the markets, was around energy and the extent to which, particularly over the past month, energy prices have been kind of perfectly negatively correlated to equity prices. What do I mean by that? When energy is going up, equity prices and indices have trended lower and vice versa. And crude oil, as well as Brent, both fell precipitously following that True Social tweet or whatever they're called there, and energy prices rallied. The other part of it, or the other sort of rumblings that I had and others I think shared, was that the close yesterday was pretty weak. Like there was no follow through on that original sort of knee jerk rally, despite a whole bunch of metrics going into standard expiration or quarterly expiration last week, falling through some important technical levels. We simply didn't have enough to really push higher beyond like 2%. NASDAQ 100 closed a little more than 1% higher. And kind of similar dynamics today, where if you just watch the markets day after day as opposed to intraday, kind of seems like nothing. But there are so many of these days where we have fairly significant swings and don't close on either extreme. It has been quite a few weeks in the markets.
It certainly has. And I continue to be blown away by the fact that one person's tweets can move things to this extent without real thought going into what's actually being said. Did anything stand out to you within Monday's session? Are there any clues on the stickiness of the rally?
Yeah, I think the way that I look at that was almost like a mirror of what we saw on Friday. So the session before was one of the worst breadth and volume down days for the broad market in quite some time. And that was largely reversed yesterday. So if I'm looking at just the NASDAQ 100, there were probably 8 of the 101 tickers in the index that were lower yesterday. So that kind of breadth is unusual to have that much participation on the upside. And there were similar dynamics across indices. But I think that can just be confusing at some point. And the broader trend for the better part of the past 6 weeks has been lower lows and lower highs with kind of a whole lot of volatility intraday in between. And really, there hasn't been a signal from my perspective, and I'm not implying that we need it, but of any sort of broader capitulation. But sometimes you do get those.
Now, as you've alluded to, the NASDAQ and the S&P 500 both fell below their respective 200-day moving averages. How concerned does that make you?
It makes me concerned, and I don't think I'm alone. I don't want to lean too much into the fear side of things or to put too much credence on a sort of longer term support level. Historically, I think it mattered more because there were more active investors that might have rules-based triggers for when they need to de-risk. with that 200-day measure being one of them. In the current market environment, I think you do have a lot of systematic, rules-based sort of CTAs, and that tends to be trend following, where the triggers may or may not be similar. Now, the only time the NASDAQ 100 has been below that 200-day moving average over the past 2 years was during the risk-off environment, March and April of last year. That was the crux of the tariff concerns. You'd have to go back to 2022 for the last iteration of, and the longest period below the 200-day. Very similar look for the S&Ps and other indices as well. And the longer we stay below that, the more concerned I get about an environment that seems similar to 2022. So just for those that are maybe newer or just removed from that, back then we had inflation ripping, real inflation concerns, and then that was sort of furthered by the Russia-Ukraine escalation, which continues to go on. And this recent sort of geopolitical spat has triggered inflationary concerns. And back then at the epicenter, like prior coming into the year, was tech valuations. And we have seen a washout across much of the software sector. It hasn't been quite as broad-based as we saw in 2022. But that's my long-winded way of saying, if we can regain that 200-day measure in relatively short order, I think, and not overdoing the fear, but my concern continues to sort of escalate.
And just to remind the audience that last week, you can find this at IBKR webinars, Kevin delivered a wonderful webinar for about 45 minutes on whether this bull market was set to rebound or whether it was going to turn into something different. So further have a look at that.
Thank you for that.
It was entertaining content. All right, Kevin, I'm going to let you go back to what you do best, back at the NASDAQ. Thank you for joining me.
Thank you for having me.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Futures are not suitable for all investors. The amount you may lose may be greater than your initial investment. Before trading futures, please read the CFTC risk disclosure. A copy and additional information are available at ibkr.com.